Welcome to the Deep Dive. Today, we're going to be looking at Abakkus Asset Manager LLP. They're an investment firm from India. And, you sent over their approach document, and it's fascinating. It's not just about their investment strategy.
Yeah, you really get a sense of their company culture. It's like they're really trying to redefine what it means to be a successful firm.
So let's start with the basics. For those who aren't familiar with Abakkus, what kind of firm are we talking about here?
So imagine a young boutique firm, and they're managing, get this, over 17,000 cores.
Whoa. Okay, so break that down for us.
Yeah, that's over $2 billion US.
Wow.
And all of that in just 5 years.
5 years. That's unheard of. I mean,
We're-
most firms take decades to reach that level.
Mm.
So what's the secret sauce? What's driving this rapid growth?
Well, their goal is to be one of India's most respected asset managers.
Okay.
But it's more than that. They're really focused on social and environmental responsibility. They're like baking it right into their business model.
Okay, so how does a firm balance, making money with making a difference? I mean, their primary goal is returns for their investors, right?
Yeah, of course. But Abakkus seems to believe that those goals don't have to be, at odds.
Hmm.
So, for example, their Kaveri Calling project, they planted 2,400 trees. And get this.
Okay.
That's enough to make them net carbon negative.
Okay, now hold on. Let's unpack that term a little. Net carbon negative. What does that actually mean?
So essentially, they offset more carbon than they produce. So they're basically environmentally sustainable.
Wow. So they're actually having a positive impact.
Right. They even got a climate neutral badge for their efforts.
Huh. So it's like they're appealing to a whole new generation of investors, people who, care about the environment.
Exactly. And it's not just the environment. They're also committed to gender diversity, which is a really big deal, especially in India's financial sector.
Yeah, the document mentioned that the industry average is only 20% women. Pretty shocking, honestly. So what's Abakkus doing to change that?
Well, they want to hit 30% women by 2025.
Okay.
And they're really backing the Young Women in Investment Initiative to make that happen.
That's great. What does that initiative actually involve?
So it's more than just, raising awareness. They have these boot camps specifically for women who are interested in finance, and they even offer paid internships, some of them at Abakkus itself.
Wow, so they're actually creating a pathway.
Yeah, they're really creating opportunities.
That's fantastic. But, they're not stopping there. The document also highlights their work empowering children.
Yeah, they're really committed to investing in the next generation. For the past 4 years, they've been working with the Cosmic Divine Society to feed 1,200 children every year.
Wow.
And their work with the Vallabhdas Dagara Indian Society is really something. They're essentially co-parenting 20 mentally challenged children, helping them gain independence.
It's like their definition of investment goes way beyond the stock market. They're investing in their community, investing in people. But let's not forget, they're still an investment firm, right? Who's the brain behind this whole operation?
Well, that would be Sunil Singhania, the founder, and he's got quite the resume. He was the former CIO of Reliance Nippon Life Asset Management.
Okay.
He was overseeing something like $11 billion US in equity assets.
Whoa. Okay, so this explains the rapid growth.
Right. He knows what he's doing. But there's more. He was also the first Indian on the global board of the CFA Institute.
Really? That's impressive.
And he was the honorary chairman of their investment committee. And on top of that, he's currently on the IFRS Capital Markets Advisory Committee.
Whoa, wait.
And he's the only Indian member.
That's a lot of accolades.
Oh, yeah. And he's consistently ranked as one of the best fund managers in India.
So we're talking about a real heavy hitter in the financial world.
Yeah, someone who commands a lot of respect.
It makes you wonder how his past experiences are shaping Abakkus,
Definitely. Like all that time managing billions at Reliance, it probably has a lot to do with their focus on long-term growth.
Yeah, it's like they're taking a different approach, not just following the traditional playbook.
Right, like they're blending his experience with a fresh perspective. And that brings us to their investment philosophy, the MEETS framework.
Okay, now this is where it gets interesting. Is this just another Wall Street buzzword? Or is there something really unique about their approach?
Oh no, this is much more than just jargon. MEETS stands for Management Quality, Earnings, Events Trends, Timing, and Structural Opportunity.
So it's all about doing your due diligence, right? Really understanding the businesses they're investing in.
Exactly. It's a very analytical and disciplined approach. And a key part of that is their focus on alpha generation.
Yeah, okay, now what does that mean exactly?
So they're not just trying to match the market, they're trying to beat it.
So they're looking for those hidden gems that everyone else is missing.
Yes. Companies that they believe are undervalued by the market. Companies with the potential to generate higher returns.
Okay. I'm intrigued. So how do they actually find these undervalued companies? How does this meets framework help them do that?
Well, each element of the framework plays a crucial role.
Okay, so walk us through it. What's the first M all about?
The first M stands for management quality, and they place a lot of emphasis on that. They're looking for strong leaders, people with experience and integrity, a solid track record.
Makes sense. You want to feel confident that the company's in good hands.
Right, and then the E is all about earnings. But they're not just looking at the numbers, they're digging deeper.
So it's about the quality of those earnings, right? Making sure it's not just a one-off fluke.
Exactly. They want to see strong earnings growth, but it has to be sustainable.
Got it. So management earnings, what about the T?
The first T stands for trends and events. This is where they're looking at the bigger picture.
So like global trends, economic factors, political events.
All of that. They want to see how those things might impact a company's performance.
So they're not just looking at the company in a vacuum. They're looking at the whole ecosystem.
Exactly. And then the second T is all about timing.
Ah, yes. The age-old question of buying low, selling high.
It's about finding the right entry point, making sure they're not overpaying for a company's growth potential.
So it's about value, not just hype.
Exactly. And finally, the S stands for structural opportunity.
Okay, break that one down for us.
So this is all about looking for companies in industries with long-term growth potential. Like maybe they're riding the wave of some big economic trend.
So it's about betting on the future of an entire sector.
Yeah, like the rise of e-commerce or the demand for renewable energy.
Got it. So they're really covering a lot of ground with this framework, but it's very strategic,
Yeah,
very methodical.
right. It's not just about throwing darts at a board. It's about carefully selecting companies.
And all of this is applied across different market capitalizations.
Exactly. They have different strategies for large cap, mid cap, and small cap companies.
So they're not just a one-trick pony. They're adaptable.
Right. And you can see it in their results. Their growth has been incredible.
All right, I'm starting to get the picture here. But let's get into the nitty-gritty. What kind of companies are they actually looking for in each category?
That's where things get really interesting. We'll dive into that after a quick break.
Stay with us as we explore how Abakkus is identifying those hidden gems in the Indian market. All right, so we're back and ready to dig into the specifics of how Abakkus approaches different segments of the market. It's not just a one-size-fits-all approach, right?
No, not at all. They invest across the board from large cap to small cap, but they tailor their strategies for each category.
Okay, makes sense. So let's start with the big guys, large cap companies. What's Abakkus' strategy there?
Well, it's interesting. They don't just go for the companies at the very top of their game. Instead, they look for what they call aspiring leaders.
Aspiring leaders, so companies that aren't quite at the top yet, but have the potential to get there.
Exactly. They're betting on the future, not just the present.
So it's a bit of a contrarian approach then. Most investors just flock to the companies that are already dominating.
Right. It's about finding those hidden gems that could disrupt the status quo. And they actually give an example in the document.
Oh yeah? Who do they highlight?
Polycab India. It's a leading manufacturer of wires and cables.
Okay, yeah, I've heard of them.
So they're already a well-established company, but Abakkus believes they have the potential to become even more dominant.
Interesting. So it's not just about finding small, unknown companies. It's about finding companies with room to grow, whether they're large or small. What about mid-cap companies? What are they looking for there?
With mid-caps, they're looking for strong earnings growth, and they're also looking for companies where the market perception could improve. You know, companies that are kind of flying under the radar.
Ah, so companies that have the potential to become much bigger players.
Exactly. And they mention IFL Finance as an example. It's a non-banking financial company.
Okay.
And they think it's well-positioned to benefit from the growth of India's financial services sector as a whole.
So they're riding the wave of a larger economic trend.
Yeah, and they point out that it has strong management, a good balance sheet, and a history of solid earnings growth.
Sounds like they've done their homework.
Yeah.
Now let's talk about the more, well, the riskier end of the spectrum, small cap companies. What's their approach there?
Well, for small caps, they're looking for what they call non-linear opportunities.
Okay, non-linear opportunities. Explain that one.
So these are often smaller companies, maybe in niche sectors, but they have the potential to grow really, really fast.
So we're talking about companies that could be the next Google or Amazon.
Potentially, yeah. They could be the next big disruptors.
That's exciting, but also very high risk.
Oh, definitely. High risk, high reward, right. And they actually give a specific example, Jindal Stainless.
Jindal Stainless.
Yeah, it's the largest private stainless steel company in India.
Okay.
And Abakkus is betting on the growing demand for stainless steel.
Ah, so they're looking at the bigger picture again.
Yeah.
How the demand for certain materials is going to increase.
Exactly. They're thinking long term. And it seems like they're not afraid to take risks when they see that kind of potential.
It's a good reminder that diversification is key. Don't put all your eggs in one basket.
Absolutely. And it's important to note that Abakkus isn't just passively investing in these companies, they're actively involved.
Oh, really?
Yeah, they're monitoring their performance, meeting with management teams, just making sure their investment thesis is playing out.
So it's more of a partnership than just, buying and forgetting.
Exactly. They're in it for the long haul. But let's not forget, they're still operating within a larger market context, and they have to manage risk carefully.
Right, and they've outlined a 5-pronged risk management strategy. Let's break that down. What are they focusing on?
So they're looking at 5 key areas.
Hmm.
Company risk valuation, risk market risk, liquidity risk, and concentration risk.
Okay, so 5 different types of challenges. So they've got their work cut out for them. Let's start with company risk. What does that entail?
Company risk is all about really understanding the specific vulnerabilities of each company they invest in, going beyond the surface level.
So asking tough questions. What are their competitive advantages? What are the potential threats? Are they well managed?
Exactly. And then valuation risk. Well, it's pretty straightforward. No matter how great a company is, it can be a bad investment if you overpay for it.
Right, so even if they find a fantastic company, if the price isn't right, they're willing to walk away.
Yeah, they have to be disciplined, not get caught up in the hype.
Yeah.
Now, market risk is a bit different. That's about the overall volatility of the market, the ups and downs.
Right, no one can predict the market perfectly.
Exactly. So instead of trying to time the market, they focus on building a portfolio that can handle the inevitable swings.
So they're looking for companies that are likely to perform well over the long term, regardless of short-term fluctuations.
Exactly. They're not panicking when the market dips. What about liquidity risk? That seems especially important for small and mid-cap companies.
Yeah, those stocks might not be as easy to buy and sell as the larger companies.
You're right. So they have to be careful about that. They make sure their portfolio has a good balance of assets with different levels of liquidity.
So they're not stuck if they need to sell something quickly.
Exactly. And finally, concentration risk. Well, that's all about diversification.
Right, not putting all your eggs in one basket.
Exactly. They spread their investments across different sectors, different companies, even different geographies.
So if one investment goes south, the whole portfolio isn't wiped out.
Right. It's about managing risk effectively.
Hmm.
And it all ties back to their philosophy, being disciplined, analytical, and focused on the long term.
It's clear they've put a lot of thought into not just how they pick investments, but also how they manage the risks. So what really makes them stand out? What's the Abakkus edge, as they call it?
That's a great question, and it's one we'll explore right after this.
Stay with us as we uncover what makes Abakkus unique and why they might be a compelling choice for investors. Welcome back to the Deep Dive. We've been talking about Abakkus Asset Manager LLP, and it's safe to say they're not your average investment firm.
No, they're definitely shaking things up. Blending their financial expertise with this commitment to social responsibility, gender diversity, it's pretty unique.
It really is. It's like they're proving that you can be successful and still make a positive impact. So what can the average investor, someone like me, learn from Abakkus? What are the key takeaways here?
Well, I think one of the biggest takeaways is this idea of aligning your investments with your values. Abakkus shows that you don't have to choose between making money and doing good.
Yeah, it's like investing with intention, putting your money where your heart is.
Exactly. And it's becoming more and more common, too, with the rise of ESG investing, all these funds that are focused on sustainability and social impact.
So there are options out there for investors who want to make a difference.
Absolutely. And another thing we can learn from Abakkus is the importance of taking a long-term perspective. They're not trying to get rich quick. They're building a portfolio for the long haul.
The long game. Yeah. That requires patience, though.
It does. It's a challenge in today's world, but Abakkus reminds us that investing is a marathon, not a sprint.
So don't get caught up in the hype. Stick to your strategy and ride out the ups and downs.
Exactly. And finally, I think Abakkus highlights the importance of diversification.
Right, spreading your investments around.
Exactly. Don't put all your eggs in one basket. They're investing across different sectors, different market caps, different regions.
It's like building a safety net for your portfolio.
Exactly. It all comes back to their overall approach, being disciplined, analytical, and thinking long-term.
Well, it's been fascinating to take this deep dive into Abakkus Asset Manager LLP. They're a company that's challenging the status quo, showing that you can achieve financial success while making a positive difference in the world.
I agree, and there's a lot we can all learn from their approach, no matter how much experience we have with investing.
So as we wrap things up here on the deep dive, we'll leave you with this. How can you apply these principles to your own investment journey? Can you find companies that align with your values and have the potential for growth? Remember, investing isn't just about maximizing returns, it's about making a positive impact. Thanks for joining us.